You've probably heard the saying, history doesn't repeat itself, but it often rhymes. Right now, the rhythm of Bitcoin's 4-year cycle is playing a very familiar tune. We're in that strange, quiet phase after the initial fireworks, where the market is moving sideways and people are starting to wonder, is this time different? They see the consolidation, the lack of a face-melting rally right after the halving, and they're starting to doubt the pattern. But what if this cycle being different is exactly what's setting us up for a more powerful and sustained bull run than ever before? The script is still playing out, just on a slightly different timeline than everyone expected. They see the consolidation, the lack of a face-melting rally right after the halving, and they're starting to doubt the pattern. While Bitcoin is quietly building momentum, most people are looking at the wrong signals. In this video, I'll break down the historical patterns, explain the key differences in this cycle, and show you why another, higher all-time high isn't just possible, it's inevitable. While Bitcoin is quietly building momentum, most people are looking at the wrong signals. To figure out where we're going, we have to know where we've been. Bitcoin's entire life story is built around one unchangeable event, the halving. Every 4 years, the reward for mining new Bitcoin gets cut in half. This programmed scarcity is the engine that drives Bitcoin's massive bull markets. Let's do a quick recap. After the first halving in 2012, Bitcoin's price exploded by over 9,000%. Then came the 2016 halving and the cycle repeated, with the price climbing nearly 3,000% over the next 17 months. And most recently, the May 2020 halving, which sent the price from around $8,700 to nearly $69,000 by November 2021. The pattern is clear. The halving tightens the supply of new coins, and within 12 to 18 months, the price hits a new parabolic peak. It's a classic script of supply and demand. This brings us to the latest halving on April 20th, 2024, which cut the block reward to just 3.125 BTC. Based on history, we should be on our way to a new peak. But as of today, in November 2025, the market feels different. We saw a powerful rally earlier in the year, blowing past $100,000 and setting new all-time highs, even touching $124,000 back in August. But the explosive follow-through many expected hasn't kicked in. Instead, we've been consolidating, leading many to ask, is the cycle broken? The answer is no. The cycle isn't broken, it has evolved. And the reasons why are the very foundation for the next inevitable leg up. The single biggest difference this time around is the launch of spot Bitcoin ETFs in the United States in January 2024. This wasn't just another headline, it was a complete structural shift in the market. For the first time ever, huge financial institutions like BlackRock and Fidelity gave mainstream investors an easy, regulated way to buy Bitcoin. This is no longer a niche asset. It's now a globally recognized macro asset. Let's just look at the numbers. Since their launch, US spot Bitcoin ETFs have accumulated around 1 million BTC. That's roughly 5% of the entire circulating supply, locked away in institutional vaults. What does this actually do to the price? It creates a constant, massive source of demand. Every single day as investors add Bitcoin to their portfolios through these ETFs, real Bitcoin is bought up and taken off the market. This demand is structural and long-term, not driven by short-term retail hype, like in past cycles. While the initial 2024 inflow was a tidal wave, 2025 has seen continued steady demand from these new players. This institutional buying actually front-ran the halving. In past cycles, the bull run really started after the halving. This time, the rally began before, fueled by the ETF launch. That's why we saw a new all-time high so early, and it's why the post-halving period has felt more like consolidation. The market is just digesting these huge new flows and building a much stronger foundation for the next move. If you're finding this breakdown useful, take a second to subscribe to the channel. The market is changing fast, and our goal here is to give you clear, data-driven insights to help you navigate it. While everyone was focused on ETF demand, two other huge factors were quietly working on the supply side, giving this cycle its unique feel. First, the Mt. Gox elephant in the room. For over a decade, the market has been worried about the eventual repayment of creditors from the hacked exchange. The fear was that these early adopters would immediately sell their recovered Bitcoin, flooding the market. In 2024 and 2025, some of those repayments finally began. That, along with coins sold off by governments, added a temporary supply to the market that helped absorb some of the intense ETF demand and kept the price from going completely vertical. But here's the key: these distributions have been gradual. The supply bomb that people feared turned out to be more of a slow release, and much of that near-term selling pressure has now been absorbed by the market. That cloud of uncertainty is finally starting to clear, giving the market breathing room to move up. Second, and most important, is the halving itself. With the new daily issuance of Bitcoin now cut to just 450 BTC, the market is already absorbing far more Bitcoin through the ETFs than is even being created. This supply-demand gap is a ticking time bomb. While the market has been distracted by everything else, the core principle of Bitcoin is working silently in the background. The supply is getting squeezed hard. So, what happens when you put it all together? We have a cycle that started early thanks to unprecedented institutional demand. We had temporary supply pressures that have now eased up. And all the while, the daily flow of new Bitcoin was cut in half. History shows the peak of the bull run typically hits 500 to 550 days after the halving. For this cycle, that window points directly at late 2025 to early 2026. The pieces are all there. This consolidation we're seeing isn't a sign of weakness. It's the market building a launchpad above $100,000, a level that was pure fantasy just a couple of years ago. This isn't the same cycle as 2016 or 2020, it's bigger. The demand is no longer just from us, it's from the largest asset managers in the world. The supply shocks are more complex, but the biggest fears are now behind us. And through it all, the halving continues to be the heartbeat of the market, relentlessly tightening supply. The choppy price action we've seen isn't a failure of the cycle, it's a sign of its maturity. The market is stronger and deeper than ever. The path to a new all-time high is never a straight line, but the destination is inevitable. The combination of programmatic demand, constricting supply, and clearing uncertainty is setting the stage for the most significant bull run in Bitcoin's history. But I want to know what you think. What's your peak price prediction for this cycle? Let me know in the comments below.